next on Business Edge, we will be speaking about the landscape, the future of microfinance banking industry. We know that they have recorded significant growth in 2024, with total assets reaching 2.8 trillion naira as of June, up 91.3% from the previous year. This surge was driven by a 168% increase in deposits liabilities to 1.3 trillion naira, which was fueled by aggressive term deposits, pricing and increasing adoption of technology. The loan portfolio also expanded, with net loans rising to 27.5% to 1.3 trillion naira. Despite this momentum, persistent inflation and a high monetary policy rate of 27.25% as of February 2025 has raised borrowing costs, constraining access to credit. The report examines the sector's performance, opportunities and risks, and is aimed at financiers, operators, analysts and regulators seeking insights into Nigeria's evolving microfinance landscape. Adebiyi Olukoya, head of non-bank financial institutions, Augusto & Co., joins me now, and it's a pleasure to have you here.
Thank you for having me.
Give us a picture of, we've seen quite the boom within the microfinance industry over the past couple of years. And, well, not a short period, we've seen the acceleration. Give us a picture of what has facilitated that growth, spurred that growth within the industry, and just the magnitude of that growing interest within that space.
Okay, so obviously Nigeria is a developing country. We have quite a lot of people at the bottom of the economic pyramid, and these people, they need funding to have a way of life. So they need funding to start up small businesses, right, to be able to generate income to feed their families. So generally our population growth has driven the growth in the microfinance banking industry, because every day, every year, we have more and more people that the microfinance banking industry can service and provide facilities to set up small businesses, entrepreneurship, etc. So that's the primary driver of the space.
Right, and like you said, there is a huge need, there is a huge demand, and there has been quite the growth within that sector. And there are concerns that when you see such growth within that sector, do we have the regulation to carry it? So are we waiting for things to fall before we have the regulation in place to keep things in check and protect the customers?
So regulation is in the microfinance banking industry is difficult for both the regulator and the operators. At the moment, there are over 729 operators in the industry, so it's very hard to manage for CBN, which is the regulator of the industry. But I'll say the industry is trying and the regulator is trying. Recently, there was they revoked licenses of 129 microfinance banks. That's to ensure that the space is still being operated by operators that have good financial condition, good regulatory reporting standards, and can meet obligations as and when due. So in that respect, there's a lot of drive from the regulator to ensure the industry is still standing. But like I said, it's challenging. There's not, in terms of numbers, it's not like the banking industry where there are a lot fewer and they're a lot larger as well. So it's easier to manage for the regulator.
Right. So and we have seen the CBN do its bit. Quite a number of microfinance banks have been shut down by the CBN over the years, right? Give us a picture of that. And, as a follow-up as well, we know that there is a lot of demand for seamless digital transactions. It does appear like some of the legacy banks are falling our hand, to put in quotes. So how is the technology keeping up with some of these demands in the market for seamless digital transactions? Okay,
I think in 2023, early in 2023, when there was the cashless policy implementation, a lot of transactions failed. It's estimated that we lost around 20 trillion to failed transactions. But I'll say since then, the gap has reduced quite a bit. A lot of microfinance banks have invested in the platforms. So you have your USSD, your online, your internet banking, your mobile apps, etc. There's a lot of investment going into that. I'll say what remains is really the infrastructure, which is probably the most expensive part. So that means if you're dealing with the likes of, if you're trying to use cloud infrastructure, you're dealing with tech giants such as Microsoft, Amazon, Google, or even if you're trying to bring it locally, you're still dealing with tech giants such as Oracle. So the infrastructure is what will ensure things can scale. So when more people are using your platform, the more robust your database is, the more robust your infrastructure is, the more likely transactions will likely to succeed. So I think that's where the biggest gap is. But those things cost a lot of money, billions and billions of naira, because ultimately it's going to be paid in foreign currency.
Right, and I guess that means that the sector needs more investment. Or what does attracting the funds to drive and grow that infrastructure look like? How do the microfinance banks go about that?
In terms of a lot of microfinance banks are bootstrapping, which means they're using their internal funds. As they're making profits, they're driving it back into the investment on infrastructure and technology. But you also have a lot of the neobanks. They're raising money from investors, and they're using that money, the likes of Moneypoint, Kuda, etc. They're raising money from international investors, local investors, and they're driving that money straight into technology. But there's also hope for the traditional microfinance banks. If they can't really afford the infrastructure on their own, they could possibly also partner with the likes of your Paystacks, Flutterwave, people that already work on that kind of infrastructure.
And I mean, so much is happening within that sector with the neobanks, with the microfinance banks. I'm imagining the legacy banks are sweating right now, are they? Is there a threat, the competition here?
There is. There's a fear that they're going to lose a lot of the transactional banking income to the new fintech players. But like I said, like we started this conversation, a lot of microfinance banking is driven by demand for credits. So a lot of the traditional players still have that market in terms of their clients demanding credit, but they want to move beyond that. They want to be able to also earn transactional income, also get a bit of deposits on the retail side from their clients, which a lot of these newer and tech-driven microfinance banks are enjoying.
Yeah, recently we did see one of the neobanks overreach its license, right, with one of its products. I think it was it Moneypoint also, if I'm not mistaken. But yeah, there's a lot happening there. What can legacy banks learn from this? What can they learn from what is happening with the neobanks? Is there a lesson there that they can learn with the speed and the growth in that sector?
Yes, I think they are learning, and they've learned really fast. So the idea is to ensure they don't fall too far behind. They're a bit behind now, but they still feel, in a sense, that the customers, especially at the low end of the economic pyramid, are still theirs because they generally demand more credit. So it's just to ensure they expand the offering to those customers and basically recapture some of the lost transactions with those customers.
I beg your pardon, that was Paystack overreaching their license, not Moneypoint. So looking into what's happening, in that industry, we know that initially there was an issue, especially with the neobanks, there was an issue of trust with consumers. How has, consumers or customer sentiment shifted towards these neobanks and the microfinance banks over time? There was an issue, okay, some of them may not have a physical office. That's just going beyond the microfinance bank. They may not have a physical office, so how can I trust them? But are we seeing a shift there with the customer psychology?
I would say definitely, especially in the urban centers, because when you need to do a transaction really quickly, and the traditional banks are not able to ensure that this transaction, let you know how successful the transaction is immediately, and you can get that from the newer fintech-driven players. A lot of people are happy to start doing transactions with the likes of Moneypoint, OPay, even though it's not a microfinance bank, etc. So in terms of, they're happy to do transactions with those. So in terms of ensuring that they're able to, sorry, I lost my chain of thought.
Yeah, I mean, there's a lot to be done.
Yes.
So let's come to the financial literacy part. Stick in line with the question that was asked, right? The financial literacy that needs to go into, obviously all of this is to drive cashless policy, smoother, transactions, digital transactions. So what do you think needs to be done when it comes to educating the general public? We have a large consumer market. It's one of our selling points, right, for a lot of investors. So what education needs to go, into them to drive this cashless movement?
So financial literacy and literacy in general is really important for cashless economy. So in terms of, we've seen in Kenya, there's the M-Pesa that works. So we've seen that it can work in a developing economy, but I think there's a need to shift our mindsets a little bit in Nigeria in terms of the culture. So we're seeing a lot of the traditional microfinance banks go into. We're seeing a lot of the traditional microfinance banks going to actually training their customers in using the applications and ensuring that they move to a mobile or technology platform in case we ever have another period of challenges with cash in the economy.
And another challenge. And speaking of challenges, the macroeconomic pressures here in Nigeria, we're talking about inflation, high interest rates, and all of that. What risk mitigation strategies can Microfinance Bank adopt at a time like that?
Okay, I think it's important for microfinance banks to remain conservative in their approach to lending. So in this kind of period where you have inflation rates 20-30%, default rates, PAR, which portfolio risk, has increased as well, by 2 percentage points. It's important in periods like this to ensure that you're conservative in terms of growing your portfolio. Make sure you're not growing above the inflation rate. Make sure you're servicing your existing clients mostly, and then whichever clients you're adding into your portfolio, make sure that they are well appraised. And also you test them with obviously small loan amounts before going to the larger loan amounts. So when they now become a repeat customer, you can be a bit more comfortable with those.
Yeah, so there's a lot of strategy there to drive growth. But we did speak, a little bit about CBN and what they're doing with regulation and revocation of licenses. Apparently in 2023, 179 microfinance banks were revoked. Their licenses were revoked by the CBN. And I'm sure there's a lesson there for those that are on the ground, right now in terms of their operation. So let us into some of the lessons there, even as they do attempt to drive growth. What are some of the lessons there? And what does the future look like for these the microfinance banking industry as a whole?
Okay, so in terms of the way licenses were revoked, so obviously with microfinance, they're national. There are 9 national microfinance banks, 129 state microfinance banks, and the rest are units. So we have tier 1, tier 2 units. So there were no national microfinance banks that lost their license in that period. The majority were units, microfinance, and states. So I think the general lesson for the industry is CBN is paying attention. So don't necessarily think because microfinance banking industry is small relative to the banking industry, commercial banking industry, that they're not paying attention. They're still going through the books, doing annual CBN visits, reviewing performance, and if you fall by the wayside, they will happily revoke your license and then meet any insured depositors.
Right. So play by the books.
Yes,
very much. And the future, the landscape of the microfinance banking industry.
I think we're going to see a lot of the traditional players come back a bit in terms of the areas in which they've lost to the neobanks. Some of the neobanks also have bigger ambitions. Some of them want to become commercial banks. I think the likes of Money Points are also looking at becoming commercial banks. So that space, I think, will still remain for these legacy operators that we all know well. But they're also going to challenge a bit more in the space of retail depositors, retail transaction income, etc. And then we might see some of these neobanks actually move out of the space ultimately.
So a lot to look forward to, and it seems all these pieces are shifting rather quickly. But it's been a pleasure having you on the show. Adebi Olukoya, it's a pleasure. Head Non-Bank Financial Institutions, Augusto & Co. Thank you very much for joining us on the show.
Thank you very much.